For decades, if you wanted to talk about global growth, you really only needed to say one word. China. It was the undisputed manufacturing champ, an economic titan. But lately, that engine has started to sound a little shaky. You can't miss the headlines about its real estate crisis, simmering trade tensions, and a problem that no amount of money can fix overnight. A population that's shrinking and getting older. But as China is forced to face this new reality, a very different story is taking shape just to its south. A new contender is getting ready to step into the ring. And no, this isn't just about India becoming the world's most populous country. That's old news. Beyond the sheer numbers, India is quietly lining up 3 deep structural advantages, 3 secret weapons that China might find impossible to counter. So, what are these weapons? And could they create a wave of economic momentum that reshapes the rest of the 21st century? The pivot from China to India. Let's be clear, the era of China's insane double-digit growth is over. Its winning formula, built on endless cheap labor and massive government spending, has hit its limit. The world is looking for the next engine of growth, and the spotlight has swung firmly over to India. While China's growth is expected to slow to 4% or less in the coming years, the IMF forecasts India's economy will charge ahead at a resilient 6.4% through 2026. This keeps it firmly in place as the world's fastest-growing major economy. This isn't just a temporary trend, it's a fundamental shift. It's the story of 2 giants on completely different paths. In early 2025, India's GDP officially surpassed Japan's, making it the world's 4th largest economy. For years, the India versus China debate felt a little one-sided. China was the factory of the world, India was the back office. But today, the ground is shifting, and India is armed for what's next. Let's look at the weapons in its arsenal. Section 1. Weapon 1. The demographic boom. The first, and maybe the most powerful weapon, is something China has lost and India has in spades. Youth. India has already overtaken China as the world's most populous nation, but the real story isn't the total number, it's the age. Roughly 65% of India's population is under 35 years old. The median age is just 28, a world away from the aging populations in the US and China. This isn't just a number, it's a wave of human potential, often called the demographic dividend. For the next 2 decades, India will have one of the lowest dependency ratios in the world. This means it has a massive number of working-age people to support its children and elderly, creating a powerful economic cycle. A huge, young labor force drives production, and as they earn, they become a massive consumer class, fueling domestic demand. This makes India's economy incredibly resilient to global shocks compared to countries that depend heavily on exports. While India's population is expected to grow until around 2064, China is staring down a demographic cliff. The legacy of its one-child policy has become a ticking time bomb, a shrinking workforce and a ballooning elderly population that will strain its economy for decades. This demographic edge is the foundation of India's potential. It's a long-term force that will power its growth for a generation. The challenge, of course, is creating enough jobs, but having the world's largest and youngest workforce is a strategic asset no other major economy can claim. Section 2. Weapon 2. The Open for Business Revolution. India's second weapon is a quiet revolution happening within its borders, a massive reform agenda designed to finally cut the red tape that has held its economy back. For decades, India was famous for its bureaucracy. That's changing, and faster than you might think. The biggest game changer was the Goods and Services Tax, or GST. This reform unified India's 28 states into a single market, getting rid of a messy web of taxes and making it dramatically cheaper to do business. It sent a clear signal to the world. India is open for business. The result has been a steady climb in the World Bank's Ease of Doing Business rankings, where India jumped 79 places in just a few years. But it doesn't stop there. The government's Make in India initiative is a major push to turn the country into a global manufacturing hub. This isn't just a slogan, it's backed by powerful policies like Production Linked Incentives, PLI, which basically give companies cash rewards for setting up and increasing local production. And according to a June 2025 report, it's working. India has now dethroned China as the world's most economical manufacturing hub, ranking number 1 in affordability. This cost-effectiveness is a game changer. Add to this a massive push to digitize the economy and liberalize rules for foreign investment, and the message couldn't be clearer. Section 3, Weapon 3, the industrial pivot. India's third weapon is its pivot from the back office to the factory floor. For years, the global division of labor was simple. China made the hardware, India provided the software. That's not the story anymore. India is now making a serious play for high-value manufacturing. The most visible sign of this is the China Plus One strategy. Global companies, nervous about having all their eggs in one geopolitical basket, are diversifying their supply chains, and India is emerging as a top destination. Tech giants like Apple and Samsung are aggressively expanding production in the country. Apple's plan to assemble a huge portion of its iPhones in India would have been unthinkable just a few years ago. Samsung has also invested heavily, moving its mobile display production from China to India. This isn't just about assembling phones, it's about building an entire ecosystem. India is now pushing to develop its own semiconductor industry to support this vision. The manufacturing sector is showing strong growth, recently expanding by 7.7% in one quarter. The government has set an ambitious, though not yet achieved, goal of raising manufacturing's contribution to GDP to 25%. This focus on both manufacturing and its powerhouse services sector gives India a balanced, resilient economic structure to compete directly with China in the industries of the future. The counter-argument and challenges. Okay, let's get real for a moment. India's rise isn't a sure thing. The potential is massive, but the hurdles are just as big. The number one challenge is jobs. India has to create millions of non-farm jobs every year for the wave of young people entering the workforce. If it fails, that demographic dividend could easily become a demographic disaster. Second, while progress has been made, infrastructure gaps are still a major bottleneck. You can't be a manufacturing superpower without modern roads, ports, and reliable energy. India is in a race against time to build them. And third, issues like corruption and a huge informal economy still slow things down and can scare off foreign investors. To truly cash in on its potential, India must keep the reform momentum going and make massive, sustained investments in education and healthcare to ensure its giant workforce is also a skilled and productive one. A conclusion. So, can India's 3 secret weapons really help it overtake China's economy? The demographic boom gives it a supply of human capital that China simply can't match. Sweeping reforms are making it a far more attractive place to invest. And the pivot into manufacturing is letting India capture the industries of tomorrow. The road ahead won't be easy. But unlike China, which is fighting the currents of an aging population and a maturing economy, India has a powerful tailwind at its back. Forecasts from institutions like Goldman Sachs suggest that India is on a path to become the world's second largest economy by 2075, even surpassing the United States. The momentum is real. The pieces are falling into place. India isn't just rising, it's using a unique combination of forces that could very well write the next chapter of the global economy. But what do you think? Are these 3 advantages enough to seal the deal? Let us know in the comments below.